Hello and welcome to Trading 5 Talents. In this video, I want to go over the results for my trailing stop ironfly iterations. So just as a quick review, once again, each market day I'm entering an at-the-money ironfly using SPY. This is a 10-strike wide ironfly, and I'm going to be entering every market day at noon Eastern Standard Time. I'm also using option alpha to automate all of these trades and to help me with the this forward testing project. So there's a link down in the description if you want to try out automated options trading. Just click on that link and it'll take you over to option alpha. So a couple of weeks ago, I had the idea of testing 4 different ironfly variations, and those variations are listed here: 15-30, 30-30, trailing stop, and free range. And then from there, what I wanted to do is to iterate each one 5 times, and then so I have a total of 20 different ironfly bots running simultaneously. I would choose the best one from each iteration set and use those parameters to somehow make a final trading bot that I would use and hopefully make some passive income with options trading. So the topic of today's video is going to be this trailing stop iteration set. So the variable that I'm changing here is going to be the trailing amount. Now each ironfly that's entered is going to be a 7 DTE ironfly. It has a 90% profit exit target and a 30% stop loss. But what I'm changing is the actual trailing stop of each of these bots. So the first one is a 15-1. And what this means is that at a 15% profit target, there's going to be a 1% trailing stop that's activated. Then I'm going to have a 15% profit target and then a 2.5% trail, and then a 5% trail, which was the original trailing stop variation that I chose. And then I'm going to have a 10% trail bot, and I'm going to have a 15% trailing bot. So every time the position gets into 15% profit, a trailing stop activates, so that if the value of that option spread, that ironfly, falls to that trailing stop amount, that's when the bot will exit that trade for a profit. But if it just goes to 90%, then it's just going to exit at 90% profit. Or if it never activates the 15% activation target and falls down to a negative 30%, then the bot will exit there as well. So let's see how these iterations performed. Down at the bottom, there is a line chart that shows the profits of each of these iterations. So obviously, the higher up on the chart, the better, the more profit you have. And then going from left to right is just the number of trades that were entered. Each of these iterations, they had about 20, maybe just over 20 trades that were performed with these bots over on option alpha. So some things that I noticed with the trailing stop iterations, every single one of these were profitable. I think the lowest profit was $1,437. That's the red one down there, the 2.5% trail. Every single one of them were profitable. Here's what I noticed if I increased the trailing amount, going from 1% to 2.5%, 5, 10, 15%. So as I increased the trailing stop percentage, I found that there was a decreased win rate. So if you look down here at the bottom, at the blue iteration, the 1% trail, 90% win rate. And then it goes to 90.9% win rate. And then 2.5, 90.9, the 5%, 90.9. Jump up to 10%, it goes down to 85.7. And with a 15% trail, it goes down to 76.2. So as the trail increased, the win rate decreased. And that's what you can see in the bottom donut charts. It just has a visual representation of the wins to losses. Also, by increasing the trailing amount, I found that there was an increased profit. Not only did you have a smaller, or a worse win rate, but you had more profitability, which I guess is a good thing because you don't have to be right all of the time to still make a decent profit. So you can see over in the line chart that the purple and the green, which had the 2 largest increasing trails, those are higher. They have more profit than the yellow one or the blue and the red one. And in fact, there's a really interesting correlation that you can see in the line chart, and that is the 1% trail and the 2.5% trail. They're approximately equal. I mean, they really follow a tight correlation pattern throughout the whole testing period, as do the 10% and the 15%. Very similar. So, if you're going to do a trailing stop, there's not much difference between 1 and 2.5%. There's not much difference between 10 and 15%. However, there does seem to be a pretty big difference between a 10% and a 2.5%. And that 5%, I mean, it really is just right in the middle of both of these two sets. So with all of this information, I think it seems to me that it's just better to let the trade play out. With that 10% and the 15% trail, I believe the reason they're more profitable is just because there's more room, really, which means more time for the position to reach its profit target or close in a higher profitability state. So it's just better to let the trade play out. When you have a very tight trailing stop, it doesn't allow the trade to do that. Therefore, you're going to get stopped out a lot earlier. So with all that said, I believe the 10 and the 15% trails are the winners of this iteration set. And there really isn't much difference. I mean, if you look just right at the profit amounts, 2024 versus 1989, that's what, $35 difference between these two. And so when you're talking about $2,000 and a $35 difference, there's really not too much difference to me with that $35 spread. However, if I were to pick between a 10% and a 15%, I would probably go with a 15%. And the reason being is I can get just as much profit as a 10%, but I don't have to win as much in order to get it. I could be wrong more often and still have the profitability, and you can see that by the win rate. So let's take a look at the numbers in Google Sheets. All right, so here in Google Sheets, you can see the graph that we just saw with the 10 and the 15 being the top performers. And you can also see that the number of trades that were taken with the 1% and the 2.5% and even the 5%, 22 trades were taken in the same amount of time it took these two 10 and 15% iterations to run 21 trades. So when you have a tighter trail, you can close out earlier. And so more trades are opened and closed by the time these open and close their final trades. So that's why there's a difference in number. But regardless, the same amount of time has passed. So once again, you can have a lot more losers in the 15%. So it looks like there were 5 losers out of 21. There's only 3 losers in the 10%, but they pretty much had the same amount of profit. So just some things to highlight right here. For example, in trade number 4, I were to highlight these, the 10% had $179 in profit. The 15% trail, because it had more room, more time to go into profitability, $308 in terms of profit. You can see here by closing out early, you gained $92 while you lost $4 in the 15%. That's fine. And then here's another example right here in trade number 18, $56 for a 10%, but $171 for the 15% trail. So yeah, there's going to be some back and forth. You're going to have more profit sometimes with a 10% trail, and then other times you're going to have more profit with a 15% trail. It pretty much balances out, and they pretty much have around $2,000 in profit. But once again, if I were to choose, 15% would probably just edge out the 10% trail just because I can afford to have more losses and still have that profit. So if you have any questions about this iteration set, please leave a comment down below. I'll try to get back to it as quickly as possible. Or if you have questions about iron flies, about automated trading using option alpha, then leave those down below as well. Till next time, trade wisely and take care.